gold H4 time frame. Last week you saw vertical breakout of head and shoulder chart pattern on one new CPI. Since then it is sideways and traders are confused where it will go next, because from current price level there are two possibilities that it goes to 1983, your strong resistance, or retest neckline of this chart pattern, that's mean 1935. If it retraces back, then first you have this dynamic trend line and neckline. So 1935 is your strong support level. If it retests this week, then you can buy on H1 or M30 time frame. Because if you draw full retracement top to bottom, then your minimum retracement 38 is 1936. So before that level there is no big support, no retracement. But breakout of this new sideways range depends on news this week. And after this vertical breakout, gold was overbought on all time frame from H1 to M15. But now RSI is coming down. But to understand next price action of gold, because many traders sold at 1930 or below 1935, your daily time frame give you clear answer, because in next 2 weeks either price close of 1983 or go back to strong support 1893. If you see from this bottom, when CPI came first big miss, since then gold is going up, and last week CPI drops from 4% to 3%, and at that speed next month you can expect 2%. Then before this year it can easy to expect 0% CPI, and that is only possible that your 9.1% CPI turns into 3% if your economic boom turn into economic bust. So other FOMC member tone was different this week after CPI number. They are directly saying that CPI number was good. So this week blackout period will start, and before it start they are now saying clear that July FOMC meeting they will do 25 basis point rate hike, but that will be last. And one thing always remember, this Fed monetary policy is designed to control inflation, and this did not happen in last 40 years. So most of the money manager and analysts do not know what is happening. So they have 40-year-old habit, and especially your Fed bullard who are saying on this top that Fed terminal rate will go 7%, and now that person is leaving Fed FOMC meeting and he will not participate in July FOMC meeting. And since CPI is now 3%, next month it will be 2%, so there is no reason to hike Fed interest rate, and inflation will hit their 2% inflation target. But you as a beginner trader, you did not watch Fed FOMC meeting speech and what he said in ECB forum, because that entire vertical price action, $100 from bottom to top, was all about CPI number. Because in last FOMC meeting, Fed said real yield are going up and they will decrease real yield. And if that happen, gold has to go up. You did not watch Fed FOMC meeting and no news company told you about this thing. So until next July FOMC meeting, Fed explained us how low real yield will go, gold can stay bullish. And 1983 is technical resistance, but they will not go back to zero or negative. So until real yield go back to zero, gold will not go $3,000. And all the buyers who bought gold after CPI news, they have no reason to take profit until Fed comes again and explained how much he will decrease real yield. And another important thing he said in ECB forum, that core inflation will not go down before 25. And if you notice, CPI and PCE both are down and both are below Fed interest rate. That's why real yield are positive. More they go down, more real yield will increase, and that's why gold is going opposite. But as Fed explained in ECB forum, problem is core inflation. Core PCE and core CPI, they are still up, and only way to decrease real yield is rate cut. Because as long as real yield are positive, gold upside direction will be limited. And since this clarity about real yield will not come before July FOMC meeting, so low chance that price retest again 1935 support level. Because seller will not sell and buyer will not take profit. So you can expect sideways correction until next FOMC meeting, then breakout. And your gold weekly time frame closing is same as expected last week near 1960 level. So upcoming weekly candlestick can make tail below 1960, but closing can be above 1960. And follow your daily time frame resistance 1983. And last week was also important. A new thing happened. Euro area and China both are already in recession, and now your one more country, India, is in recession. Because if water level does not go back to normal level after this week, then this will turn into climate crisis, and one by one all central bank will panic. And second thing, this was your top when public was saying the inflation is going up. Immediately it made top and it was in downtrend until Fed said inflation is transitory. So your bullish trend was started here when your rate hike trend was ended. This is your beginning of second inflation wave. And when public will feel that inflation is going up again, then long-term trend of gold will change. But on weekly time frame, you can see until these two level 1620 and 1807 breaks, it is technically bullish. And for Intraday trader M30 time frame, 1963 is your key resistance level. On intraday, it can go up and down on any news because consumer confidence and inflation expectation both were up. Immediately it came down vertically. So you have new sideway range between 63 and 54 and your super strong support 1935. And this week news, job claim, building and housing number and retail sales. And because of blackout period, price action will purely depends on your political news. So 1954 support, then 1945.